All right, all right. What's going on, everybody? I'm gonna just give it a moment. It's like maybe people are sleeping in today. That Alcoa just never stops, it seems, huh? I heard that Apple is finally gonna try to do something significant with Siri, and that's going to put them into the AI race. They're about to ramp up spending if that's the case, right? But man, what a thing that they're maybe actually going to fix that broken system that they call Siri. Major replacement they're talking about by the end of the year. And they had to do something, right? I mean, they really needed to do something. It is the most broken, completely worthless tool. So that's good to hear. And of course, the opposite of whatever makes sense, they're about to spend a boatload of money, and I bet their stock is going to go up. All right, looks like everybody's starting to get in here now, finally. So I really do need to start sharing those links sooner. Just as a reminder, we're getting close to the time every year where China has this week-long event, and very often it's where they pump a whole lot of stimulus into their state-run companies. Last year we were waiting for it with Baba, Baidu, JD, PDD, all those KWeb constituents, and they actually took a front run on it. Those names started running before that week-long China event. So if you are focused on those China names, just be mindful that we have that week-long China event coming up soon, and those state-funded companies may get a little bit of an extra boost. All right. Just as a reminder, I've been working on my YouTube. I'd really appreciate it if you guys could help me out. Go over and like and subscribe, make comments on the videos. Maybe check out some of my old videos. If you have video topics or recommendations for topics that you want to see, just send me a DM. I'm going to be growing that channel out over the year. And so, yeah, help me out. Share some videos with your friends. Help me grow that channel. It's all about interacting with the algorithm, right? So, making comments, liking videos, sharing video links. Those are the sort of things that can help the algos move my videos around. It's long form content, so that makes it a lot harder to get traction because they're not little 30-second videos about cats. Good morning, everybody. Grain around the world, everybody's reacting to the idea that the president pivoted away from invading a member of NATO. Imagine that. That's all it took to pop. There's no basis for this pop any more than there was for the drop. So while I was recommending that people don't get heavy short, which was a good idea considering where we're at now, I'm also going to encourage don't get too heavy long. It's not to say that there wasn't some great short opportunities, because there was, and I'm sure there's some fantastic long opportunities too. Just, don't get married to the process and stay nimble, because we're still in that kind of environment. As long as the Fed stays in this regime where they don't provide forward guidance, and as long as this president is still in, then the system of chaos is going to continue. I'm not the one who has pointed out that it's a deliberate form of chaos, but it is. And I think that there's a good argument to be made that they're doing it on purpose. But the main thing is to just stay nimble and keep your eye further on the horizon and realize that all of this will pass. We'll have a Fed that goes back into a normal regime where we are, set forward looking with plenty of guidance, and it will be an entirely different market to trade at that point. Continue to look for any pivot in here that shows that they are changing in a significant way. You can see these little bumps from 69 to 70, from 27 to 26. That's nothing. Don't get hung up on these minor little decimal point shifts in contracts. You're looking for a significant unwind or a significant increase in the basis point projections. And unless it's that, don't even stress on it. It won't be subtle, I promise, right? It will not be subtle at all. Like a rubber mallet to the side of the head, it won't be subtle. So we are green. We're starting to give it back a little bit. We were up a bit more earlier, but still holding the line. We have PCE, and we get a little bit of job numbers. We're going to get some GDP. It's just a first revision. And the numbers are kind of in line, so not really expecting much on that one. The job numbers are a little off. Shouldn't be that big of a deal because these aren't the big job numbers that we're always worried about. It's just some job numbers. Any job numbers you want to pay particular attention to because it goes to the dual mandate of the Fed, right? So don't skip it. Just realize that these aren't the big ones. So this is going to break up our morning a little bit because some of this data comes in at 10 o'clock. There's this market truism that I like that says if we haven't broke out by 10 a.m., and I'm talking about the 5-minute opening range within the regular trading session, if we stay within that open range and we haven't broke out by 10 a.m., we usually won't break out unless we get some news until after lunch. But that statement doesn't work on a day like this when we're going to get news at 10 a.m. So that kind of disrupts our morning. But it all is on the morning. By the afternoon, we should be good to go with whatever we get, and then we'll run it till it breaks. We got some auctions this afternoon with the 10-year. I like the 10-year. And because it's a short week, we're getting crude oil inventories today instead of yesterday. So we'll get to see what's up with the Strategic Petroleum Reserve. We're not expecting any surprise out of the Bank of Japan rate decision tonight. They do a really good job of telegraphing what they're doing. But it's a new prime minister, and they have, like any government out there, they have straight up said one thing and done another before. So there's always the possibility of some shenanigans. You can see it's a high impact risk event. We'll see what comes through. By tomorrow, we'll know. This should not put us in a hurry up and wait mode. It shouldn't. But you want to be looking for that through the day today. If we start to lose traction and the range begins to tighten up as we get closer to, say, around lunch or even into the later part of the afternoon, then it's likely that we are starting to go into a hurry up and wait mode, and we'll just contract into the close. We won't continue expansions, won't break out and run. We'll just stall out and flatten, which is fine if you trade options, right? Because then we could just run, 0-day short verticals, condors, things like that, butterflies, whatever. So we'll keep our eye out for that. I've seen some comments about military bases. You know, we had bases. We had bases over there, and we closed them because we didn't want to spend the money to maintain them and keep them. And so, you know, that is worthless info. It doesn't. It's not helpful. It's like saying, sure, I have a monster truck and I could drive over every car that I come across rather than swerving around them, but it doesn't mean I'm gonna drive over every vehicle I see. Sure, we could put bases over there, but we already had bases over there and we didn't keep them. So what's the point? Thanks for nothing. They are getting louder on this intervention threat. Now, when it comes to not telling the truth, when it comes to intervention, they're horrible at that. They'll intervene and straight up say, no, we didn't intervene. What are you talking about? I wasn't us. But at some point, they have to show the allocation of funds, and then it all comes out and like, yeah, okay, yeah, that was us. But then it's weeks later, you know. Um, some of their biggest interventions were done in coordination with the U.S. and the Fed, and that was back in Yellen's day. But significant moves in the S&P when we saw intervention in Japan. So they're running their mouth. We'll see what happens if things get out of control. It's that carry trade demand that's really the cause of concern, right? Because if the carry trade gets too crowded and then we start to get an unwind, oh boy. That is bright. All right, the call wall did roll down a little bit. It wasn't a significant amount, and it's OPEX week, right? It's the third. No, that was last week. We're done with OPEX. We're beyond the OPEX week. This move in the call wall, it's just a 1 day thing at this point. We need to see that it's going to stick. It's going to be there for more than 1 day and not rotate back out again. So keep your eye on where the call wall is now and those strikes. See if we start getting attention on those through the day today. We can see the 10-week down here at the bottom, basically around that 6,900 level, and we're above that. We have an inside day breakout with a Busby. We are Busby off of yesterday's high and the 10-day moving average and the 20-day moving average. But we're pinched between the 3 up here, that's the 3-week, and the 10 and the 20 down here. It's possible that we could sit there and wind up. It's just like, you remember that old mechanical jack in the box where you'd wind it up, wind it up, wind it up, wind it up, and then finally it'd pop and explode? We could get that little bit of a situation here. It is also responding with the VWAP, right? So we outran the VWAP, dragged it up. Now we've come down and made contact with it. If we were to get underneath it, then we would look for reciprocation, just like we talked about earlier this week. It's a simple measure. Just mark what you've got. Yeah, that wasn't a very good job, but get the idea. Mark what you got, set it underneath. That would be your target to the downside. That's what it owes us. If we get a break here, if we run up and set a higher high and then we come back down, then measure that higher high, right? Whatever you got. So we're looking for reciprocation if we cross that VWAP. Crossing the VWAP would mean that we're back inside of yesterday's high and back below the 10 and the 20. We still have the 3 way down here, right? So if we hold above the 10 and we get back above that 3 week, we're going to be looking to see if we can drag that 3 back up through the 10 and the 20. If you look at it out here on the daily, maybe it makes a little bit more sense, right? We got everything tangled up right here. And that's what we're trying to deal with. There is that gap that needs to be filled. Now I get it. Some analysts will use the entirety of that candle and they'll say, look, if we get anywhere inside that candle, then the gap is closed, right? So that's basically all of this range. I'm not that kind of analyst. As far as I'm concerned, we closed here and the gap is not closed until we get back here. It is as simple as that. I'm not saying that they're wrong and I'm right. I'm saying there's more than one way to do it, and you want to pick one and then just do that all the time. Don't form fit and pick and choose when you want to do it one way and when you want to do it another way. So for me, I always do it this way. I don't change. You do you. That is a gap that does need to be closed. We will close it eventually. That's not a maybe. It's just a given. Now that we have broke outside of yesterday's range, we really need to keep it. It is possible to break out, come back in, break back out, and then continue to go. But those are less likely than breaking out and keeping it in the first place, right? So this is yesterday's high. We broke out of yesterday's high. We really need to keep that. If we come back in, the likelihood of us getting back outside of that level again is diminished considerably. We would need some news, catalyst, macro event, something that can shove us back out the door again. So sure, it's possible, but it's a lot of extra work that we want to try to avoid if we can. Otherwise, if we do come back inside, which is getting back underneath the 10 and the 20, it's very likely that that's what we keep for the day, and we would at that point begin to focus on lower levels. And even though the call wall moved down some, it's not down by much, right? It's still a long ways off. Let me check to make sure that I updated this file. Pretty sure I did, but I'm gonna do it anyways. Yeah. Oops. Now I'm gonna break it. Yeah. 22nd. All right. It just seems a long ways off. If it rolled into us, it didn't give us much. 70.32 cog line is what it is. We're still dealing with a good level of volume. It is high. You know, the overnight average sits generally around 55, maybe 60-ish. So hitting 110 in the overnight, it's a bit much. And that's on positive price action, which is nice, right? Usually when we get elevated trading volumes, it's on negative days. So getting this increased trading volume on a positive day, it's a good thing. But we didn't really get much out of it, all things considered. We did get the move in the kill zone without much unwind. The unwind of that is generally one of my most common trades. All right, we have reached the ADR half early enough in the day that we can go to the other half by the end of the day. That would be down here, 68.90. Right, that's how it works. This is the ADR half. If you get there early enough, go to the other half by the end of the day. That's not bearish, it's not bullish, it's just price action, right? Look at the wave that we've already got established here. So with that in mind, if that's what we're working on, then we could get down to this lower level and it wouldn't be bearish or bullish. It would just be a part of this wave. You could even argue that we didn't finish that last run, right? That on the move down here, we kind of stalled out and went back up. So it still owes us that higher low without it being that one. If we do get back above the ADR half, we want to run for the ADR full, 69.79. Just call it 69.80. There's an old cog line at 82. Don't really use it anymore because it's too close to 92, but it's worth considering if we get that close. But still, 80 is a good, decent round number. So a break above our own Globex high or a break back above this ADR half puts that one on the table. If we continue with this bullishness into the open, then look to see where the SPX ADR lines are at, because the ES got its lines last night. The SPX won't get its lines until 9:30 this morning. So if we continue to run up and the ES is above this yellow line and we don't have any more up here, and trying to figure out, well, where the heck are we going to stop? On your other chart, just put the SPX on there and put its lines on, and it's likely the ES will stop running when the SPX hits its ADRs. Wouldn't be the first time we saw that happen. But we're not expecting that sort of continued exuberance. Expectation is that this is likely to slow down and or even stall out as we get closer to 10 a.m. All of these charts that I'm looking at, by the way, are now developed on TradingView, and you can get the links to those charts in the YouTube description of this live stream. While you're there getting the chart links, make sure to like and subscribe and help me grow this channel out. Really appreciate it. Today's floor pivot is higher than yesterday's floor pivot. That's bullish. Price is above it. That's also bullish. We have a MDP, that's a missed daily pivot, but it won't count today. We have to make it all the way through the entire day without hitting it, and then we can call it a missed daily pivot. You can see back here on Tuesday, this was our floor pivot, way up yonder. And we were all the way down here, so we never hit it. That's what we're looking at this morning, is the same situation. The floor pivot now is down here, and so far we haven't hit it. The S&R lines yesterday were really helpful. We ran up and tagged that R1 and just got shut down. Beautiful drop, destination style trading right back to the floor pivot. I really hope you guys got to take advantage of that, because I sure did. So now today we got the S&R lines. We haven't reached one yet. The move to the upside is going to have that in focus. If we get that breakout above our own Globex high, R1 is the target. If we get there and reject it like we did yesterday, anticipate a rollback, but they don't always roll back so strong as this, right? That was a really nice rollback. Generally, you get a pullback like this right here, and then the continuation to the upside. You see that really big explosion there. That was like getting us back to where we were and then overshooting the cake. Generally, if we're going to keep it, we just get a little bit of a pullback and then we come on up. But we ended up getting some news after that rejection and then that waterfall back down. Then we stabilized and, we fixed it all up and made our way back the other direction. So if we get to R1 today, don't anticipate that we're going to get such a waterfall rejection. Instead, anticipate it's going to look a lot like that right there. Then we'll decide what's going to happen next. Maybe we pull back and we continue to work our way down towards the floor pivot, or maybe we just stay up there and hug that R1 for the rest of the day, or we get above it and we focus on R2. There is a phrase that says if R1, then S2. So we're talking about if we get all the way up here, we could be down here by the end of the day. That comment, however, I had somebody ask me questions about that yesterday. If you just think about how price moves, right? We get a fall to the downside, and you get a bit of a move to the upside, and then a continued fall. Well, that move to the upside, that would be a hitting R1 before continuing to work your way down into the S2, right? So it's a part of a bigger picture trend in play. That's not the situation that we're looking at here, right? We've got a crossover event. Let's put it back on the 15 here a little bit. We've got a crossover event where we've been working our way down for days. Now we're trying to kind of turn and move our way back up. So that R1 to S2, it doesn't really fit. If it was going to happen, it should have happened yesterday, right? If it was going to happen, because that would have been the move down, the pop up into an R1, and then the continued move down into the S2. And that's not what we got, right? Instead, we got this turnaround where we rejected, but then we got back above it. So I'm looking for R1 and a hold, or an overshoot of R1 and get into R2. But if we can't get above R1, watch to make sure we don't fail and come down and tag that floor pivot. Because remember, markets want that floor pivot. They hit that pivot more than they miss it. So if we do reject R1 and start to fall, destination trading, that's the target. We got this point of control from last week over our head that we need to deal with. So if we continue this run to the upside, that's just around 92, right? It's like 69.88. It's close enough. Call it 92 cog line. So if we can close the gap from where we ended last Friday, we get the gap closed first, overshoot it into 92 cog line, and then we'll see what happens after that, right? One of the big things is that we're inside the channel, right? We got that breakout here, but we're also above last week's low. When we were below last week's low, then we were in a completely different environment. But now we're back inside of last week's range, and we want to get this gap closed. So that's what we want to focus on. That's how it looks on TradingView. Although I still need to tighten up the row size a little bit. I think they're too fat. That's definitely better. See, and it auto draws the pivot points, which is nice. You don't have to go in and carry them forward. Or the 10-day, 30-minute. I think that turned out pretty good. I'm telling you, this year, not I was about to say next year, but this year, TradingView is very likely going to overtake most analysis platforms once they really get the integration with those options. It's going to be game on. Yeah, I still need to add a TPO to that 10-day volume profile. We'll get there. This is a 10-day, 30-minute with VPO and volume profile. You can see the point of control doesn't match with these two. They did yesterday, but the TPO has shifted its point of control to this lower level. It's likely going to build out along that line, and it is often a front runner, right? You'll see the TPO's point of control shift first, and then oftentimes the volume profile will follow it. So maybe this is going to be our new zone, especially if we can get above our own Globex high this morning and put some work in up here. We'll have to see how it plays out. We're not going to hit any more of these candles until the end of the week or into next week. So if we're going to move that point of control, we're going to have to do it by putting in new volume rather than eliminating old volume. Otherwise, we have a reasonably decent range on the 10 day, and the range is not going to tighten up anytime soon. This is our new reality. So at least we're not seeing significant changes in the structure environment. All right, yesterday we got into that BPOC that we had kept marked, right? And it wasn't technically, you can see the color is different. This one had been just barely wicked through, and so technically it was not a VPOC. But since we hadn't really interacted with it and I considered it to still be a significant level of interest, I kept it on my chart. You can see how we interacted with it yesterday. It's where we got shut down on that push to the upside. I'm not saying that that line had anything to do with it. I'm not. But I was concerned about that level as we ran into it, and I made sure that I didn't get run the hell over at that level because I had that line there. That's kind of the whole point, right? Put those levels in there, not because there's some tradable signal, right? Just because price gets there doesn't mean we got to do something with it, but because it gives us information about what's ahead of us when we're moving in a particular direction. So anyways, we crossed through that. We're done with it now. We can take that one off the board. Yesterday, we left behind a VPOC, so we now have one down here. Just got to rename it. Now, I don't zoom in and get these to the tick. The point is close enough, right? It's good enough for me. So you do you. If you want it honed in to the absolute tick, then zoom in and do that. To me, the point is close enough. So we got a new one down here. We got two overhead. We still got to resolve those. Look at the distribution first with yesterday's price, especially that run up into the afternoon. Shows buying exhaustion, not sellers attacking. So interesting distribution. They came in and tried to fight it back here, but they didn't come in and try to fight it back here. Now this morning, we've got this double distribution, and the TPO and the point of control with the volume profile and the point of control are showing different locations. It does look like we're going to see this shift up here really soon, and it'll be at that level, but it's not there yet. And the entire value area needs to change, right? They are putting in a lot of work up here. If that's buyers putting in all that work and they're not getting any returns, it's very likely they're going to wash it and try again. If it's sellers putting in this work, then we're going to have to see who wins this battle. But there's a significant amount of effort being put in up here. And so far, neither side is coming out ahead. So look for that to resolve itself. Shallow area. So once we do, if we do drop through that lower pivot, 6940, old school cog line, should drop right through it easy into the 32 cog and then get outside the value area to test our Globex low. We are back inside the week's range. Remember, we're supposed to close inside this range 70% of the time. We got outside of the range on Tuesday in one day when the range for the week is supposed to last for the entire week, but we made the trip in a single day. Not much of a surprise that we whipped back the other direction. The problem is we're just getting back to where we were on Friday. We haven't even gained anything on the week, right? So let's just get that gap closed first, and then we'll focus on whatever else we want to focus on. We are back above the 10 week as we talked about earlier, and this regime is still in play, right? We still don't have a change to this, but I am looking for 2.5, 3.5, right? I'm looking for a big shift out of this structure. We haven't got it yet, but it eventually we're going to get it. I think we're going to get it. The only other option is that we get another bear market like the 2022 bear market, and we completely reorganize the way that this looks, right? Kind of go back to, I guess I need a little bit more time here. You can see the sort of same situation as we got into the 2022 markets, and then we spent, a considerable amount of time down there. Well, we don't want that, right? That's not good. So rather than get that sort of market, let's anticipate the structural breakover and an end to this lower high situation and start putting in a 2.5 or a 3.5. That's what I've been kind of looking for. We are less than 1% away from the 10-week, which means that we are still close enough to it that we could stay in this range. It might take a considerable effort to get out of that 1% zone. Headline news, some macro event, something. Without that, we could sit here for the rest of the week. Getting within 1% of the 10-week without a catalyst can get us stuck there. So let's hope we get right back out again quick. Or that whatever data we get at 10 o'clock today has enough push that it can get us out of that zone. We are at the 10-day. If anybody was looking at the move that we had in the last 2 days thinking we moved too far too fast and that it owes us some sort of mean reversion back the other direction, no. This says we have not moved too far too fast, and it does not owe us a mean reversion back to the downside. In fact, we're back to the center of the basketball court. From here, we could move 1 to 1.5% up or down before we'd even start to consider that we've moved too far too fast. Looking at what's down this morning, really not much is down except the VIX. And the VIX was up like 6% in a 5-day period. So the fact that it's down today 4.5% doesn't really mean all that much when you put it into context like that. So the VIX is down, and the Mag 7 down volume is down. And yes, that's a double negative for those of you who have a little bit of math. The Mag 7 up volume is up. Nat gas is also up because of that crazy winter storm that's coming. Hey, be careful this weekend, guys. It's supposed to be wild, crazy cold, right? This wicked storm is expected to come in, and that's one of the reasons that nat gas went all squirrely. So just be extra careful this weekend. Chips are up, uranium, Mag 7, the smaller float stuff. You see ARC. We got quantum, generic tech, expanded tech, growth, more low float stuff with the IPO ETF. Almost like we're getting some form of like factor rotation, right? Hedge fund factor rotation. That small cap resurgence since the start of the year has really just been a bit shocking, really. So we're still seeing that push today. Communications are up, and then China. We got every sector and industry that we would want for a rally day, except finance. I didn't finance. There it is, way down here. So we need more out of finance. If that's the only missing piece, if we got that, we have everything we need for a rally, and we don't need finance for that rally. It'd just be nice to have it. All right. So from a breadth perspective, we're solid. We could keep this rally going, and we could get into 7,000 easy, even get up into that call wall today, no problem. The problem comes in with the rest of it, because if we start to get any outside data going in the other direction, right? Say FX markets because of Japan or the dollar yields, anything that can counter this market breadth that we're seeing, that could just shut us down. It doesn't mean that we would fall down. If we have that much positive breadth, then it could just stop us from rallying without necessarily sending us down. The simple part of today is that with all that breadth, we just don't want it to turn negative. It can stall out and stop rising. That's fine. We don't want it to turn around and go down. All right. So pick your poison. Any one of these would be enough, but keep your eye on chips, expanded tech, and the Mag 7 as a group, whether you're using MAGS or the NY Fang or one of those, right? I just like Mags better, but it doesn't matter. The rising tide lifts all boats, and these are the tide makers. So with this, we have everything we need for a rally. Now it's just got to follow through. So if it begins to fail, then anticipate a stall. I wouldn't look for a fall unless we've got some reason to do that, like a headline or something like that, right? Don't think that it's going to be happening on its own. Well, I mean, TrendSpider is kind of in its own category, right? It is its own thing. And the data that's on TrendSpider, I mean, the reason I think TradingView is going to beat everybody, including TrendSpider, is because of the open source ability for people to code their own stuff, right? There is some fantastic options tools already on TradingView, and they barely have any options data at all. Wait till they have full broker access to options data, and then the public gets in there and starts coding indicators. It's going to be a monster. But they've got some really sophisticated, amazing tools for options already. Already. So, guys, that's what I got. As always, it is GTFO. Got to get out of the box before you do anything else. I see really good questions in the chat. This is not the place, right? I try to get in and get out of here as quick as possible so that we can get ready for the trading day. I would say send me those comments and questions in a direct message, and then I can address them and give them the attention that they deserve. For today, we got to get out of the box as it is every day. GTFO. The box today right now is this Globex range. If we stay outside of yesterday's range, then we're just looking for a break above our Globex and we'll continue the push to the upside. Otherwise, if we get outside the box to the downside, then we want to focus on the RTH low of yesterday and then the real low of yesterday as the next level lower than that, right? So it's a really simple process. Get back inside of yesterday's range, target that Globex low. Get outside of that, target the half, which would be that level there, 92 cog. Underneath that, target the real low. Underneath that, that low, right? Level by level by level, right on down. It is that easy. To the upside, just keep running it. We'll run the expanded dynamic fib process that I developed years ago. It works. It works really good on trend expansion like that, and we'll just run it till it breaks. So what I got for you guys, be careful, be safe. I'll see y'all tomorrow.